Welcome to Market Matters. I'm Khoo Hsu Chuang, joined by Lynn, Tang and Chong, where we try and bring you the best and the worst of the markets. Lynn, today we saw a bit of a bounce on the local bourse, but a lot of question marks exist as to whether this bounce is sustainable.
Exactly, Chong. So today I actually saw a report by IFCA MSC. It says that it still expects downward bias in the global equity market, and on the local front, it expects more downside ahead for FPM KLCI. But because of this, right, actually some values have actually emerged. So UOB, in a report this morning as well, has actually said that based on its valuation screen, more than 40% of companies under its institutional research trade is actually trading below its respective book value. So yes, the market is bad, but perhaps some of the stocks, like banking stocks, actually.
Well, of course, the big question in the market is really whether or not it's time to get your feet back into the water and get them wet or not, or whether there's more downside expected. Let's get a handle on the market numbers with Chong.
It was indeed a dead cat bounce today. KLCI rebounded today, closing 2.08% higher, but it failed to recover yesterday's losses. Yesterday, it closed 43 points down. Bargain hunters are buying up blue chips today. Although the KLCI went up today, fundamentals are still pretty weak. Economists say that sustainability of the upward traction depended on the Chinese market. Now we look at the Chinese market. Shanghai Composite Index dropped another 7% today after yesterday's close 8% down. And research houses like what you say just now, TA Research and Affin Hwang, they cautioned the KLCI would face further sell down on lingering. In other words, which means there's possibility of slipping into red again for the next few days. And the concerns are at 1MDB, we see narrowed, we see lesser foreign reserves and extremely weak ringgit. Ringgit is only at 4.25 against US dollar, and against Singapore dollar it was at 3.03 when I last checked. Capital outflows have also been accelerating. People in Malaysia, they have been sending money out from Malaysia because of the lower value of the ringgit. But in Singapore, we see a lot of Singaporeans flocking in Malaysia, Singapore tourists flocking in Malaysia because they think that Malaysia ringgit is cheap. They're buying up ringgit. Malaysia money changer has running out of ringgit, basically. And Reuters actually say the same thing. Asian markets look vulnerable for further sell-off because of what happened in China.
Well, goodness gracious me, there's not too many jitters in the market right now. Okay, thanks for that, Chong. Let's move on to our hot stock of the day. Our hot stock of the day, of course, is IFCA MSC. Its shares are up 12% to 56.5 cents this morning. A nice little bounce for this once software darling on the ACE market. Now, of course, this stock has been pummeled really badly, and I think there's a lot of jitters for IFCA MSC because it started off well with its GST aspirations on the domestic business, but then its longer-term earnings impacts is going to come from China and Indonesia. And of course, China is kind of like a dirty word right now. So I think there's a lot of concern that IFCA's long-term fortunes are going to be quite murky.
Exactly, Chong. So before we continue, at this point in time of recording, IFCA is actually expected to announce its second quarter results, I think perhaps after market close at 5 p.m. today. But what we can actually write on at the moment, it's you said, property market in Malaysia and China, they're actually weakening. So what IFCA MSC does is that it actually provides software solutions to those in the property industry and its exposure to Malaysia and China. But by virtue of these two countries actually not showing actually growth in their property markets, right? So this could actually weigh down on IFCA MSC, Chong.
Yeah, I mean, I think there's two sides of the business, really. It's the short-term Malaysia-focused domestic business where I think it's quite resilient in terms of earnings. And then the medium term, and don't forget that, IFCA paid 32 million ringgit to buy the subsidiary in Indonesia. Of course, that's the longer-term outlook from there. China as well. But domestically, the software as a service business, the GST business, that's going to drive earnings. So I guess, it's really a case of whether you have the courage and to put your money, and of course, fortune favors the brave. So it's really whether or not you've got the courage to come in to buy.
But you're quite positive about this stock, right?
I like the stock, but then, fundamentals don't really matter in this day and age. So it's a bit of a tough question.
And its share price, I was just looking for the past 1 year, it's actually been rather volatile. So it went to a high of 1.88 ringgit, and today it closed at 57 cents. So despite actually announcing better first quarter results, the share price didn't quite translate to the share price.
Absolutely.
So perhaps you're wondering whether did it actually run ahead at one point?
Yeah,
what the case of being too optimistic?
Okay, that was our look at IFCA MSC. Stay right there because we'll be back with some momentum stocks.